Want to sing. This song makes me want to sing. All right. Good morning, everybody. How are you? Welcome to QuantBox Live. This is your hour of power. If you don't spend all day, every day trading, then this is your hour of power because you're going to very quickly find out what's actually happening in the world relative to what actually should be happening in the world. And that puts you in the right state of mind and the right place and time. So, anyways, welcome to QB Live, where we uncover the best fundamental opportunities across global markets. Our AI driven analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality, and now including market sentiment. We can uncover the best fundamental opportunities. That means there's a reason why the markets are moving, whether it's forex or stocks or bonds. Commodities are all interrelated. I'm a believer in Newtonian physics, as a form of economics. But anyways, my name is Wayne McDonald. I'm the founder of QuantBox. I'm also a Harvard-educated economist, which means I know a few things. And I've been also watching the market for 20 years, and I've always been fundamentally based. I make a fundamental bias through sound research, and then I use technical analysis to confirm or deny the opportunities. What does that mean in simple language? If I'm a bull, I want to buy dips, and I don't do anything else. So I got to become a bull, and then I need technical analysis to identify a dip. Anyways, QuantBox has lots of pretty colors. It's like Christmas every morning. It's that good. Now, we drill into the fundamentals, but we also drill, as you can see, into the technicals. Here's a 7-day projection into the future. Speaking about the future, look at this. This is a 20-year and 5-year research of what the S&P 500 is doing at this time. And notice what should be happening and is happening is happening. Yet, guess what? Retail sentiment is 50-50. Retail has no idea what's going on. And yet, institutional investors, 66.62% are short. And it's falling. And retail has no clue what's going on. So you got to choose a team. You want to be on the institutional side, or do you want to be retail forever? Anyways, cool. There's lots of amazing stuff. If you happen to be watching this on YouTube, this video was recorded many hours before you're watching this. Right now, it's just 6:35 on Wall Street, 3 hours before the open of the stock market, and we're already putting together our plans. Cool. So anyway, swing by quantbox.co, take a trial. 1 week for less than $8. And after that, it's not even $80 a month to go from dumb money to smart money. I think it's fair. It's fair. It's fair. It's a fair. All right. So, anyways, guten Morgen. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let me log into the Google Cloud. I'm so happy, oh so happy. All right, I will send a 7th email to the development team. What the hell's going on over there, huh? All right. Maybe I need to fire somebody, huh? What's the rule in business? Hang them high for all to see. Wait, that's in my book. It's not in a textbook. What Harvard will teach you is sit down with them and try to help them find their true, authentic self. Uh-huh. Yeah, in the unemployment line. You're out. Hit the bricks, kid. All right. Anywho, here we go. 10-year T-note yield is going up. It says 0.0, but I remember yesterday, wasn't that long ago, it was 4.18. So yeah, obviously going up and down, but kind of going the wrong way. Oy vey. Holy smokes, that is ridiculously high again. Uh, as a reminder, maybe 3 weeks ago, we were at 4.2, and then it dropped all the way down to 3.99, 3.98, and now we're all the way back. So something is happening. Kind of a mixed bag, huh? To go from 4.2 to 3.9 to back 4.2. Hey, would you call that mixed? Yeah. Did we expect mixed this time of the year? Oh, yeah. Oh, yeah. Cool. Oil all the way back down to 81. Nice. Maybe an opportunity to buy that. Okay. Maybe. I like it when things are down, but I have an uptrend. The only thing that would destroy the uptrend, of course, is that we're going into a global recession. Thank you, China. Maybe China's the thing that breaks the US economy. There's all kinds of things that can do it. It doesn't even matter. You'll never know until it's happened, but you should know that you're vulnerable, right? What does a human do when they're vulnerable? Right? They cover their cover up. Uh, what happens to a boxer that keeps their hands down? They get knocked out. So, anyways, something's going to happen. Left hook, right hook, uppercut doesn't matter. So we'll have to pay attention and see if maybe China's the thing that drags us down. Nonetheless, you should be positioning in your stock portfolio in such a way that you're not really hurt by any of this. And we hope it's a drop, a dip, not a drop. S&P 500 at 4438, down another 1%. But if you recall, almost a month ago now, our target was 4444, conservative target. It could fall as far as 4,100. And if it starts doing that, I'll probably just buy it just because of the price. Just that's that. Because if you recall, I outlined that as being a 10% drop. Cool. I'm not looking for a 50% drop. Not yet. We can avert all that, but it could happen, but I'm not planning on that yet. So it's getting interesting. Okay. Look at that. Euro dollar was 110, then it was 109, then it was 110, and now it's 109. Would you call that mixed? Uh-huh. Did we expect this type of market this time of year? Yep. Thank you, QuantBox. Bitcoin, okay, was 29. I think I owned a Bitcoin a day or two ago, and at 29.3 went to 29 like 5, maybe 29.5. I can't remember. I'm just going over. And I'm like, yeah, nothing's happened for 24 hours, which means this is going to drop on me. Right? If it ain't working for me, it's going to backstab me. So, anyways, I took my money and ran. And sure enough, it's now $200 lower. Wouldn't have made much of a difference. But, anyways, at least mentally, it felt really good that I wasn't exposed to that downside risk. And I did the right thing. I cashed out. Thank you, Kenny Rogers. Kids, you'll have to Google it. All right. So anyway, so what's going on in the world? Nothing. See, nice little mixed bias. Now this stuff here below in the bright green and dark red, well, that's long-term stuff. These are scorecards of what should be. Okay. Think of logic versus emotion. The markets are mixed right now and they have mixed emotions. Right? But it is correct, but it may not agree with the long term. And so this is a great way to reaffirm what's going on in the world long term. For example, probably Aussie dollar weakness, because you can see very bearish Aussie dollar, very bearish Aussie CAD, then very bearish Kiwi dollar. Okay, so maybe it's dollar, and you can see there's a lot of dollar stuff going on, but it could just be weak Aussie and weak Kiwi. So you want to keep an eye on that. Okay. And then you see here Euro Aussie very bullish. Once again, weak Aussie, weak Aussie. Hey, maybe the Aussie is weak, but it doesn't mean it's weak today. It doesn't mean it's weak right now. But you should probably align your satellites in the morning during our hour of power. And you're like, I hate the Aussie. Well, don't hate it, but I don't want to own the Aussie. I want to sell it. Okay, better. Okay, better. So we can go in and look at the scatter plot, and ooh la la, stock markets are down. Remember, some of these like S&P 500 and Nasdaq were up yesterday. Remember that? And yet something else was down, and I said, well, maybe the stock markets that are up are the outliers, and that they'll catch up. Because remember, Japan will move first, right? It opens first in the day. And so anyway, so NASI and S&P 500 are down. Even FTSE's down, not by much. Dow is down, not by much, but they're all down. Sweet. Cool. Right on. So here we are on the S&P 500. We're down below 44.44, but I prepared in the third week of June for this. I'm okay. Nice. Okay. What else is going on here? Okay. Little bit of Aussie strength on some of these. So that might be setting up for a fall in the future. Pound is strong across the board. Pound CAD, pound Aussie, pound Kiwi. Well, many of those are weak anyways. But we have lots of inflation in the UK. And like I've said over the last 3 days, not only that, but the economic situation is less bad than it could be, which allows the Bank of England to raise interest rates higher. And that will bring pound strength. Think of it this way: they will pay you more money to borrow your money. They'll pay you a higher rate if you are strong enough and confident enough or dumb enough to lend them money. And that means if you're right, you'll have a higher profit. Now you can get rid of crypto, we can get rid of indices, we can get rid of majors and crosses, and we're left with oil and gold. Gold's somewhat up, 0.1%, and oil is down 0.4%. So nothing really going on there. Cool. But once again, you should already have biases so that these things could be opportunities. So, like, for example, everything in the bottom right, see where it's bearish and unexpected? Well, these things might be up in the near future. You might want to consider that. Maybe you're like, maybe you want to trade these. Okay. And then over here, these things are bullish, but unexpectedly bullish. So these might be the lower highs developing. So think of it this way: everything here is expected to be bearish. So let's just have like down to represent bearish, but they're not bearish now, they're bullish now. So imagine it's like this. But if it's expected to be bearish, then eventually it'll do this. So you want to use QuantBox to think like, are we sort of in this scenario? Up today, down tomorrow? That's the whole point. That's how you use a scatter plot. Cool. Yep. Coolio. Looking at the news, the big thing is meeting minutes today. Okay. That's what we want to read, meeting minutes. Yeah, we have it's Wednesday, so the oil inventories report come out. That'll be interesting. So oil typically has volatility related to this, but anyone that's taken the oil trading course at Investor Bootcamp knows that Wednesday is an important day, but it's not the day. Okay. So some building permits and housing starts and mortgages and stuff. Look at that though, huh? 7% mortgages. Wowzer, huh? Mhm. But really, the big stuff is going to be these meeting minutes. Okay. But if you are trading oil, you do need to get your EIA on. It's important. We'll go to the charts here. Well, before we do, let's guess we can pick on let's do, what do we want to do? How about let's do like pound is strong today, right? We know that from the inflation report. Here's something neutral. So is it untradeable? No, no, it's just neutral. So QuantBox will help you predict the future. Now, one thing you could do is say, okay, it's neutral economically speaking. It's heavily short by retail. Well, that's the clue right there. Okay. Is it bearish? No. So here we have a worst case, base case, best case scenario looking 7 days in advance into the future based on the analysis of previous price action. Y equals mx plus b. Really simple stuff. Then you calculate the variance and okay. And then you take the square root of the variance, and that's what this is. Standard deviation. Then you do a linear projection and say, when you look at the m of that previous equation, that is equal to rise over run. And so that helps you project into the future. And then you already know the standard deviation. So one standard deviation below, one standard deviation above. Easy, easy stuff. So, anyways, math would say, truly, it's statistical analysis, would suggest we're heading up. Worst case scenario, 185. Best case scenario, probably 189. Cool. What about seasonality? Well, this pair is typically down during April, May, June, July, and it generally has been. It had an early spike, but gave it all back. And in somewhere in the around between the period of August and September, it turns bullish again. Only on a 20-year average. Only over 20 years, just 20 years. So we know somewhere in August that this turns bullish, typically. Oh, it's bullish now. Retail's heavily short because they don't know nothing. And it's already turned around. So by the time we move into September, this gray line will pop up, most likely because it's already bullish. So have we hit the trough? I don't know. That's what you're supposed to be doing. And you're like, but it's neutral. Of course, it's neutral now, economically speaking. But what are you going to do technically? When are you going to buy something going up? Your job now is to use refined technical analysis to confirm or deny that this is turning bullish. Okay. And really, what you're doing is you're hunting the stops of retail traders that are heavily short. Can you imagine they're heavily short? Oh, oy vey. What if? Huh? What if? So, anyways, cool. So here we're in this situation where let me change this template here. Uh, what am I doing? Oh, here we go. Biased pivots. There they are. Biased pivots, and we're bullish on this. Cool. Okay, and so this whole period would be a scenario of higher high, higher low, right? up, down, buy, up, down. It's already happened today. You see this? In the Asian session, you had an opportunity to buy in the bullish buying zone. The target for today was 185.83, and we hit it just now. And now tomorrow's trade is somewhere between the future 21 EMA and tomorrow's buying zone. So you are attempting as a technician to buy the dip. That's okay. That's tomorrow's trade plan. You're welcome, by the way. That's Wednesday. We're still on Tuesday morning. It's not even 7 a.m. We're already done tomorrow's trade planning. Today is booked, profit in the bag. What's going to happen next? I don't know. Everyone's already made their money. The London boys are already done. Okay. What about the day before? Yep. How 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 about the day before? Yep. 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 And technically, this is bullish since August 7th. Technically. And you'll notice that even though it's neutral on QuantBox, okay, it turned bullish. There we go. It turned bullish quite some time ago. Cool. Cool. Neutral, but bullish if you allow the technicals to lead. But what this doesn't say, what this scorecard isn't doing is predicting the future. It's a scorecard now. You have the future here seasonally that says up is coming soon. Well, maybe soon is now. Nothing sooner than right now. Cool. Notice it said somewhere between August and September. And then you got a 2155 cross on the 7th. Is that somewhere between the 1st and the 31st? What are you going to do about it? Is the next thing. And that's our job. That's it. So, yeah. Lovely to you, mum. So get those meeting minutes. We have a lot of meeting minutes to read. Okay. And now our biggest challenge is, will China drag us down? And of course, the risk is, if that's going to drag us down, is it going to drag us down in peak up season? Hope not. But I'll let technicals guide the way. I'll leave you with this. Based on the VIX, the S&P 500, the dollar index, the 10-year T-note, Japanese yen futures, and gold. Still generally bearish. Cool. Well, remember when everything was bullish and everything was right as rain and everybody was talking about recession averted, forget soft landing, there's no recession. Remember all that just a few weeks ago? I said the whole narrative is going to change and suddenly everything's going to be bad again. We have to be smarter than Facebook and Instagram investors. We have to be smarter than YouTube gurus. We have to be smarter than the talking heads on TV. Everything wasn't right as rain. So every penny that was made in July is now gone. And now it's all doom and gloom. It's the end of the world. And there's 19 reasons why the zombie apocalypse is going to return. Uh, okay. But it is down right now, long term and medium term, and we expected all that. The thing is, do you think it's dropping? I called it a fade back in January when it was bullish like crazy. I'm like, it's gonna fade. I positioned my entire portfolio for a fade. It's gonna come back around. Is it 5%? Is it 10%? I don't rightly know, but I'm basing a lot of things on the clock. And so now it's getting ugly. We're below 44.44. Now things could get ugly. It could accelerate on the way down. Lovely. Cool. And so we won't get caught in the hyperbole of the zeitgeist. And if not, and if this is heading down for another couple of weeks and a couple of more bad headlines and all the way, yeah, well, somewhere between next week and the third week of September, I'll probably buy it all up. Lower the price, the better. Cool. As a reminder, I will not be around Friday. I will be doing economic research in Cuba. Very nice. And I will not be here on Monday either. So I will arrive in Atlanta, Georgia, Monday night. I'll get about 4.5 hours sleep, and then I will see you for QuantBox Live. Nice. So that'll be Tuesday. But today is only Wednesday, right? So I'll still see you tomorrow. So there's lots to look forward to. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a subscriber of QuantBox. This is powerful stuff. I'm glad you're using it. Cheers.